Hello, 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 and a massive hello to everybody. How we all doing? Okay, rocking and rolling. How's sound? Hope everybody's doing okay. Thought the mic wasn't working for a second. Hey, good to see a lot of the usual suspects here. So 28th of August, 2016. No trade calls, no recommendations. Everybody responds for their own stuff. We're here for educational purpose only. And again, we're doing this, informal chat between experienced, less experienced traders, just trying to see if we can shoot the breeze and get a feeling for what just happened and what's likely to happen. And again, as usual, I can stay on as long as we need to. So, no questions off the table. If you have any question you want to ask, we'll answer them. Even if it's not specifically related to charts, more than happy to tackle if I can help. If there's a lot of non-chart related questions, I'll try and tackle them towards the end of the session, right? But, just shoot. So again, hey, Mario Draghi in the house too. So again, shoot. We'll use the jukebox fashion, first come, first serve. You only have to ask once. I can see all the questions and I'll try and tackle all of them. So let me know. Okay, so there's a bunch of questions already up, and let's see if we can take care of these. So. Actually, I tell you what, before we start the questions, let's just look at the data counter, right? So keep in mind that next week we've got a bank holiday in the UK on tomorrow. So market could be a little bit quiet. So don't be surprised if you got a little bit of a thin trading in EU session, right? Then on Tuesday, we don't have that much. It's fairly quiet on the data front until we get to the back end of the week. We've got some US data and we got some Australian data. On Wednesday, we got all those CPIs, but nothing major. We do have the ADP, which should be interesting, GDP out of Canada. And then it'll start to heat up a little bit more on Thursday, Friday. On Thursday, we've got a bunch of China data, all those PMIs. We've got Australian data out. We got manufacturing PMI out of the UK. We got unemployment claims, ISM. So that's interesting. And then, of course, little cherry on top of the cake, on top of the whipped cream, we got non-farm payrolls on Fridays, right? So that's something to look forward to, right? Hey, Kostas, nice to see you. Again, my pleasure to do these. Always happy. Thanks to all the guys who showed up. Thanks to all the guys who bothered to retweet it. The more the merrier, right? So, I understand if you don't want to, but could you, hey man, how's it going, Rags? Could you talk about your entry technique? Sure. I will not be offended if you don't want to share. No, absolutely not. So, okay. So, this is a good, it's a good chance to refresh our minds on the way we like to look at things, Rags. So I know Rags a big boy, so he can handle it. And always, it's very easy to give people an answer, right? What I do, a lot of people think I'm a bit of a pain in the backside, or I'm being difficult, but I'm not being difficult. I'm always I feel a sense of responsibility when I do these sessions, right? Because there are a lot of junior traders here, Rags, right? I know you're more experienced, but the problem is there's some questions where you can't. The only real answer, right? The only real, and I feel responsible answer is it depends, right? So your question is, could you talk about your entry technique? Now, my first answer to you is sure, I'd be more than happy to talk about my entry technique, Rags, but ask me on a specific pair, on a specific chart, or after I tell you I took a specific trade, or I can go through a specific trade I took, right? Because no trade is the same, right? And for me to tell you this is my specific entry technique, I don't think it's going to help you at all, because it doesn't take into account the trade. It doesn't take into account the context. It doesn't take into account my conviction on that trade. You see what I mean, right? So I'm really not being difficult. I just want to give a good answer. That's my main concern. As a general rule, my entry techniques is, to give you a quick summary, is I like to look to get in to sell strength and buy weakness. It's extremely, extremely rare for me to buy strength or sell weakness, okay? I'm looking to buy or sell where I have an asymmetric risk reward opportunity, right? Where my risk is smaller than my potential reward, or where my risk is bigger than my potential reward if I feel I have an extremely high percentage win rate on that setup, okay? Another general rule, I don't believe in trying to find some opportunity on a bigger time frame and then try to penny pinch by going out on a smaller time frame. I don't believe in penny pinching as a general rule. I always prefer to just look at it in terms of risk reward tied to some kind of percentage win rate, and if that makes sense to me, the trade's valid. I'm not interested in penny pinching either on entry or on exit, right? And that's generally. I don't know if you have any specific. If you have a more specific question, I'm more than happy to spend 2 hours here. I'm more than at this time. I'm happy to dedicate. If you have a specific question, Rags, just ask it on a specific setup, and we'll go through it. Right. Actually, you know what? We can look. We'll talk about something really, which I think could be interesting, because I know you've been looking at Aussie and Kiwi, right? We've discussed that Aussie and Kiwi a few times, right, in the past. And I think what's interesting here is something where, and also it's probably tried, linked to something I've been talking about a lot more on Twitter, right? And after this, we'll go through a full review. As an assumption, we're looking for USD strength into Yellen. We're looking for crude to have put in a short-term top, and we were looking for Aussie and Kiwi corrections to be in play, right? Sure, I'll put it on. So, I think our assumptions into Jackson Hole were good. Now, one example of what we're talking about of trades, right, and understanding the setup, and this is the Kiwi chart, and we talked about this a long time, and we said that these were two clear, this was a very interesting resistance, right? And we saw that the market kept on trying to come up, right, clearing weak players and couldn't get any traction. Right, Rags? And what we said is, we kept on saying what's important here is that the market will likely try to clip as many weak players. And we kept on talking on Twitter about, we talked about this in weekly webinars, not open to everybody, but I tried to make a case for this on Twitter too. I kept on talking about it's all about day close, right? It's all about day close. And we talked about it also in some of the other weekly webinars Sunday, where we said as long as Kiwi does not close above this level, right, it's game on for a retracement, right? So this is an example of a trade where if you're trying to penny pinch and trying to trade with a very, very tight stop here, it doesn't matter what your entry is going to be. You're going to keep on hey Debbie, you're going to keep on getting clipped, right? So this is an example where you can be very aggressive on your entry, but on your stop, either you have to have an open stop on a day close and understand the risk that is, or you have to hold a much wider stop, and that probably means above the round number, which is above the 50 back of the broader move down, right? So the way you would trade a chart like this, where it's a day close level, is very different to where you would trade a chart where you have a firm stop or something, right? And again, if you're trading this, that also means that there's no point trying to say, oh, I enter on a negative close, on a negative candle close here with a tight stop, because it's not that important. This is a kind of setup where you want to enter on, you want to sell into strength, understanding that as long as you don't close above this level, right, you got a game on, right? If you're trading something which is, let's look at it a different way, Rags. If this had actually into Jackson Hole, we'd actually pressed higher and started to clip all some stops, right? And then here we blew through the 50 back into the top of channel, clipped the round number, broke up, and then closed back below, right? On a 1 hour, 4 hour, then my entry technique would be very easy, right? As soon as the next candle opens, whatever candle I'm looking at, I'm shorting it, right? Game on, right? I'm not shorting into strength because here's I'm waiting for a level to be taken out, so I have to wait for a candle to close, a candle to finish to give me the signal, right? Because the thought process or the hypothesis for the trade is different. One is you're waiting for lack of follow through at highs or lows. So you use a candle low to entry. So it's just the next candle open. That's a trigger, right? Whereas in the previous example where you're just looking for a lot of chop around a level, you're just, when you're coming in the morning, whether you're looking at this in terms of London Open or New York Open, you're selling into strength with an open stop, right? Which is a day close stop. Does that make sense? So depending on the setups, it's going to be fairly different, okay? But again, as we go through the charts, and if I talk about trades I was in, please feel free to ask. I'm more than happy to talk through anything, okay? Yeah, so here, as we're talking on Kiwi, you've got a lot of interest. That weekly candle is heavy, right? So again, here, let's just talk through something. Following what happened on, so let's talk on what is likely to happen and what most people will be looking for, okay? So again, our assumptions: USD strengthened to Yellen, crude stops in, crude short-term top in, Aussie and Kiwi put in those highs, etc. So our expectation was that we were going to get the rate hike in September was going to, chances of that were going to be more and more priced in. Therefore, all those assumptions plus CB, ZN bonds down, right? Now, that's what we got on Friday. Now, even though we got that in a bit of a funky nature, right? Because it almost looks like Yellen came out and she tried to deliver the message, and then she came back thinking, oops, that didn't go down too well. So Fisher had to come out and just put a nail in the coffin, right? So after the action, this is very important, right? I would suspect that you'll be hard pressed not to find a more experienced trader that after what happened on Sunday, that is not going to try and come in on Monday, and the thought process is going to be, you got to sell any bounce on equities, you got to sell any bounce on bonds, you got to buy any dip in the dollar. You guys see what I mean? Right? So because the market got hit, dollar caught it long bid, so you would be hard pressed to find, I would suspect, in my humble opinion, somebody with experience not to look for some kind of follow through on what happened on Friday. So that would mean trying to buy with a tight stop, euro at lows, cable at lows, a bit of a sucker's play. Trying to, you see what I mean? It's just, you don't want to get into trouble, trying to buy equities with a tight stop, try to buy bonds with a tight stop into the open. You'd expect to see some kind of follow through. The only caveat I'd say is you have to be a little bit careful, because when these moves are so aggressive and they're just on some kind of comment that hit the wire, like Jackson Hole, these moves can really reverse on a dime. So it's not a cop out saying, oh, this can happen and that can happen. Is my base case is that we are going to see some follow through on what we saw on Friday. So that means my base case is the way I'm positioned, the way I'll be looking to trade is more dollar strength, more bond weakness, more equity weakness. But I'm just saying, you have to be aware that, it could really reverse hard and quickly. Does that make sense to everybody? Any comments or any questions? And again, I think here the natural temptation would be for everybody to say, that's it, we've put in a top on equities, we've put in a top in on bonds, we've put in a top in on Aussie, we put a top in on Kiwi. It almost feels like it would be too good to be true, right? On paper, it looks like you would be hard pressed not to argue that a short-term top is being put in. Okay, so let's see what can happen and let's see what we'll trade on. We'll try and intertwine the talk of technicals and also the talk of, what we have to deal with Yellen and expectations of this rate hike, right? And everything is going to be slightly intertwined. Yeah, by the way, this is going to be uploaded on YouTube. Don't worry. Everything is going to be a little bit intertwined, right? So, and what that means is, as long as we're going to price in more and more of this rate hike, the expectation will be for equities down, right? Now, if we get more correction, and then the closer we get to September, the Fed speakers or everything, it looks, they don't hike or nothing happens, what's going to happen? Well, right? So that's the game that's being played. So as long as the expectation for this hike are there and they strengthen, you'd expect bonds down, equities down, etc. The moment market is going to start to price that less in, then it's a bounce. So it's a question, are we going to get that and then we don't get a hike in September and we rock it up? Then they're going to talk about a talk in October, we're going to go up, then they're not going to hike in October. You see what I mean? It can be a lot of funky action. But here our base case hasn't changed. We felt that the reward was to the downside. We expected 2160s to attract all week. We've been talking about the fact that you don't want to get excited in these low grinds. You don't want to get suckered in to the way less experienced traders get suckered into these levels, and understand that when you get these kind of sideways chops, slow grinds higher, and very slow markets, you can very quickly unwind 20-30 days of action extremely quickly. Okay, so the base case for us going into the week is that as long as we get day closes below 2165s on the ES, right, we would expect the market to continue to try and trade lower. What you'd have to expect is to try and take a stab at these stops, and we think what's more important for us, the line in the sand, is the 2133s, right? So as far as we're concerned, day closes below 2165s, we expect it to try and make its way back down to 2133s. Day closes back above the 2165s and failure to get downside traction, then that upside attracts again. Should we get a very aggressive move Monday, Tuesday, we close below 2133s, we think 2100 next. We would not expect to see a very aggressive move back below 2050s. Reminder, you've got the 200 coming up to catch that. We'd expect this to catch on very, very aggressive weakness to start the week. Does that make sense? Any comments, any questions on ES? Okay. Yeah, sure. Gold also, it's the same thing. Gold, a lot of weakness here. We said, you could make a case either side here, but, struggling at those highs, trying to catch those, higher lows. No joy in holding at that 50. 1350, which has been pivotal. Remember, our range we've been looking at is that 1400, 1350, 1300. We'd expect this to try and make its way back down into this 1300 support. Now, keep in mind, you'll also have the 100 DMA coming in, and I would expect a lot of buyers to try and come in and a lot of profit taking, right? Right here, this is another thing you'd expect a little bit of continuation, but right here, it should find a bid. Keep in mind, if we do not catch a bid around this area and we start to get closes, day closes below the 1300, then this could start to turn very, very heavy, right? But all things being equal, I think the most prudent course of action is to expect that it should find some kind of support here, and then the 1300 is going to remain pivotal for either bounces or a move back down. But it looks like it wants to probe lower, but there's an awful lot of important support coming up here, okay? Also it's an interesting level. Sure, I mean, Canada, we've been talking about this 129 for a long time, and again, linked to crude. And right here, it just looks like it's basing, and our outlook hasn't changed, is that as long as we hold back above the 129, we expect to see this try to rip back higher, take out this 200, and make its way back into the 135 level, okay? Back below these lows, you'd expect to try and come back into the 125, expect to see a lot of wheeling and dealing. Now, this is my least favorite commodity currency to trade here. I have not been trading this at all practically, not very actively at all, because I think there's far too much wheeling and dealing with crude, linked to all the headline risk on crude, and we're stuck, in an area that doesn't offer too much of an interesting zone in terms of complicated stop placement, complicated whippy action, right? If we had to make a call, we'd expect this to try and grind back higher towards the 135s, but also linked to our outlook on crude, we would not be surprised to see this chopping around in this sideways zone. So all things being equal, far from being something that is really catching our attention, far from being something that we're really interested in. Okay, so in terms of those commodity currencies, we're far more interested in Kiwi and Aussie. We've been trading these fairly aggressively. Again, to give you an example, the way I've been trading the Kiwi rags is that pretty much every morning coming into London, I've been putting on a position, trying to scalp, 20, 30 pips on half, and then holding the rest open with, open as long as we didn't get a day close above that level, right? Above that 73.21.5, okay? And because this is very choppy, I don't want to hold too much overnight risk, right? Et cetera, et cetera. So the way I've been trading this is I've just been London open as soon as I get to the office, shorting into strength, taking half off to book some just as a scalp, and holding half. Every day just been putting the position back on. What I like in these kind of aggressive trades is that usually, even if ultimately you end up getting stopped out on the trade, or you stop yourself out on the trade because you get a daily close above, usually you tend to have so many days where you've scalped those 20, 30 pips on half that overall you're BE on the trade. So they're interesting because the more days you get like that, the more aggressive you can be, because effectively I look at it as one big trade, one big position, right? So I look at it as my P&L on the whole position trading around this level. Does that make sense, Rags? So that's a slightly different way of trading, but I like it. I like that being aggressive with smaller positions, working it in that kind of context, okay? And I know it's not a trade for everybody, especially junior traders. They get into trouble, right? Because what do? They try and do that, and then, they try and take 50% off. They take 50% off. Then it goes against them, and instead of just sitting tight, understanding that you got to stop with a day close here, what they do is they add, and they don't take, and it closes above, and they still don't think, oh, well, there's another resistance here, right? And then they add, and what happens? Instead of having been stopped out here for minus 20, 40, 30, 50, whatever, all of a sudden they've got about 5, 6 times the risk they have, and this is going to go cocaine angel against them and massacre you. So again, that day close stop, I think it's really not the ideal way to trade if you're more junior, if you're if you're not really disciplined, if you don't really understand position sizing, if you don't really understand what you're trying to do. Does that make sense, Rags? Does that help? But here, in terms of Kiwi, not much has changed, right? As long as this area holds, right, we're expecting for this to come right back down towards, slowly make its way back into these 70 50s, 70 70s. You've got all those moving averages that are coming back above here, right? So that's what we would be looking for. Now here, the outlook is the same thing, is as long as equities hold heavy, right, and the odds of that rate hike continue to increase, this could really just be, I can't remember who asked, Mario Draghi was wondering, is this a yearly top put in, right? So you still in the room, Mario? So, here the thing, what we could easily see happening, right? We could easily see this correct all the way back into this level, the way we're looking at it as we get closer to September, right? Then the Fed doesn't deliver, they don't hike, and then we spike up again, and then we're once again playing at this level again. Does that make sense? So, we'll know when we'll know, but clearly I'd say there's a good chance that we put in a short-term top, but, unfortunately, the way we're trading, or fortunately, is just all about these rate hike expectations, right? So if anything, this is not the kind of market where, the big macro trades are smiling at you and really easy. It's just a very choppy market. Chances are we'll get this kind of market for a long time as all these central banks try and wheel and deal and wiggle themselves out of the tight corners they've put themselves in. So chances are, it's going to be difficult to get a really, really long, quarterly move or something like that. So I'd stay extremely nimble. Okay? Yeah, sure. So Aussie, similar on Aussie. Aussie's just it's nicer because we talked about it with Rags a couple of weeks ago too. I think, it's just got so much more room to protect up here, right? So it's the same thing. As long as we haven't got any closes, we got a lot of sells into there, right? And here, we're holding heavy. Ideally, we wanted to see a day close below 76.20. And to us, that indicates that we're going to try and take a stab at the 75.30. And the next thing we're looking at is a day close below the 75.30. Now, if we don't get a day close above the 75.30, you'd expect this to try and bounce. And at this point, that level will be a sell zone for us, right? But if we go straight through, knife through butter, the 75.30, and we get a day close, then we would expect the downside to accelerate much quicker. We'd be looking closer into the 74, 73.50s into this 200 moving average. So that's in play for us too. Make sense? Okay. Yeah, I think that Euro is probably being one of the least interesting charts to trade. I mean, we had some very nice action, right? Once we started to, if you look at it in a short term, we were expecting it to come back down, right? But once we got these failures here, we started to start sloping back down quite nicely. We held here waiting into Jackson Hole, right? And then what happened? We tried to spike higher, right? But we held this series of lower highs. Market just clipped some stops right into the level, smacked back down, and corrected. So fairly nice action on Euro. Was Friday whippy? Sure, but it shouldn't be surprising. Our outlook hasn't changed here. All those failures at 1340, we were looking for a move back into the 1200, and that's what we got, right? The way we're looking at this here is day closes below 112. We'd expect this to try and come back down all the way into the 1050, right? Closes above this could easily try and rip back up into the 1340. Now, one thing which I would caution yourself, I don't like fibs in the middle of the range, right? We consider this chop range, but you want to keep an eye on this, right? So look at this on the move down, you've got, because this is trying to rotate higher. So you do have a lot of levels here. You've got the 50 back of that move higher coming in at 111.58.60. You've got the 61.8 coming in right at that 200. So, you'd want to be you want to respect that level, right? So I wouldn't be gung-ho trying to short Euro here. I wouldn't be surprised if it tries to catch some kind of a bid here. And ultimately, our base case for Euro has not changed. It's very similar to coal, to crude and stuff like that, where we expect that we're going to stay in some kind of a sideways chop. We're not really going to get unless we get something concrete out of the Fed or out of Draghi, we expect to see a lot of sideways chop. We'd still much prefer to continue to sell rallies higher, but we wouldn't be surprised if we chop around for a long time in this 113.40, 112, 110.50. We're not trying to play for an aggressive break, say to 117, or an aggressive break to 108, 107. We expect this to have a lot of range trading, decent moves, because 50, 100 pip moves, but still broadly speaking, some kind range bound. So here we would not be looking to get short again. We'd be starting to flatten up shorts into the open tonight and early in the week, depending on how things are moving, right? The September rate hike, I think last time I looked, Mario, is it's priced at, the market is pricing in something like a 38% chance, 36% chance, something like that, right? So so I don't think there's still room for this to go. There's still room for dollar strength. That's why, again, we wouldn't be surprised for us to try and make our way a little bit further down. We'll have to see how the market opens. We'll have to see how the market is trading early in the week. And again, keep in mind that the base case for the Fed is we're data dependent, right? And we've got non-farm payrolls on Friday, so that's a great, it's a great chance for us to get a better steer on, to continue what happened on Friday. Are we going to even price in even more chance of a hike or not? So Friday is going to be a big day. Does that make sense? Okay, any comments, any questions? Everybody's very quiet tonight. Any chart we haven't looked at? Any chart anybody wants to look at? Yeah, USD CHF, I mean, we were looking to buy dips here. Again, as we discussed on Twitter, our base case was for dollar strength to come back in, right? So all these dips here for us were all very buyable. And again, we wouldn't be surprised to see a lot of choppy action. And the same thing as we said for Euro, right? We don't expect, unless there's something concrete out of the Fed, right? We don't necessarily expect to see a huge breakout out of this zone. So we think the extremes of these zones are far more interesting if you had to force it in terms of, resistance into these highs, but not a pair that is particularly interesting, right? And again, the big I think here, it's all one chart, of course, right? So it's all one thing. So again, it's a question of equities and US dollar, right? And bonds to a certain extent. But again, most people don't trade, at least people in these webinars don't trade bonds that actively. So again, I think if you're trying to trade the equity side, I like the ES, possibly NASDAQ for the best bang for your buck. And if you're looking at dollar strength, then I think it makes sense to look at the dollar against some of the high beta currencies, right? Not necessarily against something like CHF. If I had to, I'd look at it against yen, okay? Yeah, and that's exactly, yeah, we'll look at cable in a second. And that's exactly what we said, right? We've been, everybody it just keeps on sending messages or on the blog, hey, yen, you got a short yen. Again, at the risk of being sounding funny, but why in the hell would anybody want a short yen at 100? If anything, you were you were shorting it at 107, 105, hell, even 102s if you had to. I wouldn't have, but anyway, right? If you had to, you're selling it on all these bounces here. But, trying to come in past weeks, trying to sell it here, just beyond comprehension for us. If anything, you'd sell it on a break of this level if you really had a gun to your head, but not here, right? And we kept on, to anybody who'd listen, we kept on saying, here, asymmetric risk reward is to the upside, not to the downside, right? So here we'll have to see what happens with Karuta on deck, if he's going to talk more, what they're going to do. BOJ next meeting is 21st of September. We'll have to see. But, clearly here, we think the risk on yen is for an attempt to take out stops here and make a run for the 103.50, right? Cable, what's going on cable? So I don't know, do you have a specific question on, Rick, do you have a specific question on cable? Yeah, I'm short cable. I think cable is, post Brexit, really, you'd really be hard pressed to try and get aggressively long cable. Now we traded it aggressively long on a tactical basis, on an intraday basis, not on a bigger term action, right? So here, what I feel is particularly interesting is, the action here around the, I messed that up, this 132.20, right? Now, who can tell me what this level is? Does anybody know? Bam, look at that. Mario Draghi, you can always count on the Mr. ECB to know his levels, right? So exactly, that's the Brexit low, right? So here, there's a couple of things going on. Now, we're not huge fans of trying to play this for a huge break lower, but again, Brexit hasn't necessarily happened. We have no idea when it's going to happen, and there's likely going to be an awful lot of Joe-boning, right? So here, I don't think it makes sense to try and be aggressive here as we have no more news to try and bet aggressively at either side here for a break of this triangle. You see what I mean? So if anything, unless we've got, Rick, something more concrete, I'd be a buyer into the low of that triangle and a seller into the high in terms of tactical basis, right? In terms of tactical trades. Now, after Brexit, you know, the only thing you can look at, in our opinion, was to try and get short on a move back into that level, right? So this was an ideal opportunity to get short, right? Again, this is a classical one where it's very, very choppy, so you have to keep much wider stops, in our opinion, if you're trying to trade this, right? And you see here how this traded, right? We come all the way back, once again, into this level. And for us, this is the tell, right? Once we come back into that low, right, which is a level which is being pivotal for Momo and flows, is, you know, if we get traction above, then there's probably a good chance that we're going to try and take a stab at these highs, right? If we can't, then chances are we'll try and take a stab at lows again. So what we found particularly interesting was not trying to be aggressively short into that level, but once you start to get all the signs of failure here or the holds back above, to try and play that shorts, you know, all these shorts here. Now, clearly, very choppy actions, but here, the outlook is as long as we continue to hold below that Brexit low, we'd say heavy, and we say short-term, the market likely trying to take out the 3060s. If it can take out the 3060s, then chance that we move back to test that bottom side again, bounce there, Brexit lows attract again. Does that make sense? That's a really key line, right? You could see how the market, well, it's not because we're saying so, it's just the market's behaving very nicely around that level. Okay, cool. Any comments, any questions, any chart anybody's looking at, any chart anybody wants to focus on, any chart anybody wants to discuss? This is the time to ask. Again, no questions off. Whatever you want to look at, we can discuss. I don't often talk about exotic pairs. Yeah, just because I don't trade them, right? So if you've got a funky pair you want to look at, more than happy to look at it, but I don't trade them, right? Simply because given the choice, I'd much rather trade a high liquidity pair with tight spreads, tight bid and ask, right? And again, essentially, it's the same chart across the board. So, of course, things are not going to trigger at the same time. But, you know, I have the chance to express my opinion through a host of charts. I'd much rather choose the ones that are tighter spreads, right? A lot of newer traders like some of the funky pairs because they move quick, but they forget that they move quick for profit, but also for loss, right? And I think there's there's a lot of enough charts with decent liquidity and tight spreads that I don't need to go look at some exotic pair, right? Yeah, we looked at CAD. Nothing, do you have a specific question on CAD? Pivotal around the 129, right? Still looks like I want to try to take a stab into the 135. Back below 125.50, right? But you must have stepped away. What we said is, Rags, is that really the CAD, and you must have stepped away because we also talked about the Aussie and Kiwi different trades, so you might want to watch that if you missed it. But I just think that in terms of all the commodity currencies, yeah, because I figured you stepped away because I tried to talk through some things for you for the question. You might want to just look at it later on if you have time. In terms of the commodity currencies, right, our least favorite is CAD, simply because you've got so much headline risk with all these jokers on the wires on crude, right? So, if you take your pick, plus you've got much fewer charts, much prefer Aussie and Kiwi. On Aussie and Kiwi, you got to deal with the RBNZ or the RBA on the wires, right? If you're trading CAD and hence crude, you got to talk with possible headline bomb, Baker Hughes, rig count, oil inventory data. Venezuela can be on the wires. Iran can be on the wires. Iraq can be on the wires. Saudis can be on the wires. Nigeria can be on the wires. Anybody can be on the wires, right? Shale producers could be on the wires. It's just asking for trouble, right? So if I had to, I'd much rather just trade crude then, right? That's all. So I just don't think it's that interesting or extremely choppy. Hey, thanks, Debbie. Yeah, and on crude here, we got a very aggressive rip here, right? Now, Rags, this is an example of a chart where I traded, we were short for that move down. We traded long to the upside a little bit, then we were sidelined. And on this move into these, when we started to get sold just ahead, we had like 2 days where we're kind of getting sold ahead of the 47, right? Here, I started to get short with a stop, my plan was to stay short as long as we didn't get a day close back above the 47, right? Had to stop myself out because this clearly didn't work, right? Then we had different chances to get back short here. Base case here is that this is, and we talked about this very early on in the week, the following day, last week. This is a short-term top, so we consider 1, 2, 3. We consider this to be a short-term top, and we expect the price to try and come back all the way back into the 142s. So I'm back, full disclosure, I'm short crude off these highs here, but I took a stop out there. Not too pretty, tried to get in a bit earlier, but it is what it is. So here we'll have to see. So as long as we get daily closes below the 47 here, we expect this to be very constructive, right? Back above, then it's probably going to really want to try and take a stab at the 50 mark. A lot of stops around here. We still expect to see a lot of two-sided action here, as we've discussed for a long time. We don't think anybody, we think there'll be a lot of sellers above 50, and we think there'll be a lot of tape bombs or a lot of buyers, or especially tape bombs back below 40s. So we think the edge isn't trying to play the extremes, broadly speaking, 43s into 49s, something like that, 44s into 48s, whatever. That's the kind of area we're broadly looking for, right? Yeah. And again, these things, the problem with crude is that, again, a lot of junior traders, they like to trade crude and gold because they think they're big boys, but it's just asking for trouble, right? These things move quick. A lot of times you have a little liquidity, end of day, you just get into trouble. So I think it's much, if you have to or you want to get a hang of it, unless you're trading some smaller contract size. But, I think it's really asking for trouble if you're a junior trader trying to trade a futures CL or GC. You're much better off trading a USO and GLD. You'll get used to trading them the same way, but you're just not trading on such a huge tick size, right? Just a question of learning to walk before you can run, right? Yeah, Aussie's good. A lot of, and again, the commodities, gold, et cetera, they tend to be very technical, right? The only issue sometimes with with the high beta currencies or Aussie and Kiwi is that, especially if you're trading the futures, but in general, they tend to be fairly, the volumes aren't that great. A lot of people don't really realize, if they'd look at the futures volumes or even on the spot volumes, euro, yen compared to everything else, they'd probably really fall off the chair, right? So I think you have to be a little bit more careful. But Aussie and Kiwi, I think much rather trade those than CAD or any of the, or even Euro GBP, right? Sure. Yeah. Yeah, but and again, spreads really should, in what year are we? 2016. Really, 2016. If you're trading anywhere and you've got a silly spread, shame on you, right? If you're trading anywhere and you've got like, I don't know, like a 3 pip spread or something, or a 5 pip spread or anything, It's shame on you. If you don't know about it, shame on you. If you know it's a big spread and you still don't do anything about it, get a ruler out, and I would suggest inflict some physical damage to yourself, because that's just silly, right? I'm sorry to be so blunt about it, but I think sometimes yes, you just need to take the ruler out and whack yourself if you're being stupid. Yeah, Euro GPB. Euro GPB is a bit of a weird one, right? Because you'd have to, it's, again, you could see a lot of wheeling and dealing, and it's going to suffer a lot with the crossfire from Euro cable, etc., across the board. But, it's very hard, with Brexit, etc., everything that's going on, you'd be very hard pressed to want to be uber aggressively short here, selling euros aggressively and buying pounds, right? Unless things change in the Brexit, since we had Brexit, the only thing you could really do, is stay long, right? And I think this is probably, in terms of macro play or bigger funds or bigger macro players, this is probably one of the cleanest ways for people to try and express a Brexit view, and I would expect to see an awful lot of buyers on any pullback, right? That doesn't, I have no position. I'm not really that interested here, and there's no reason why we can't get a little bit more of a healthy little pullback here, right? But this still looks like it wants to rotate higher. Should we come back down, even if we break back down, you're going to have that spike high, which ties in with this previous high. You're going to have the moving averages coming on, et cetera, right? Remember, just the most important thing is trade your chart, trade your system, trade what you see, and it doesn't matter what anybody else is doing. I think what's interesting in these discussions here, we're trying to look at the bigger picture, right? But remember, bulls and bears, can both make money on the same day at the same time, simply because you're looking at a different setup, different time frame, et cetera, et cetera. So even if we say here, you'd be hard pressed to try and be structurally short Euro GPB, that doesn't mean that there aren't interesting intraday short opportunities, right? In the same way that we're saying that, we expect Aussie to rotate back down to those moving averages, that doesn't mean that there may not be intraday long opportunities, right? What we're doing here is we're not trying to talk about a specific setup unless somebody asks. What we're here is we're trying to talk about the bigger picture. What are the key levels to look at and what tends to be happening, just to try and give people a heads up, maybe a little bit more of an experienced view, and just to try and share some thoughts with some people. We're not trying to dictate a bias or an opinion, right? Does that make sense? Yeah, and that's exactly the same thing we do in the weeklies, right? In the weekly webinars, everybody knows what my trades are. I'm calling my trades, etc. But we're always looking, whether I'm short or long, whether there's a long or short setup, we're always trying to look at both sides of the coin, right? We're looking at what are the longs doing? What are the shorts doing? If I'm in a trade, what I'm doing, but how would you trade this to the long side? How would you trade it to the short side? What is the best? Is it better to look for longs or shorts if you're looking at on an intraday basis? What is setting up on a 4-hour or daily basis, right? And how do those gel? It's always really important, no matter what you're doing, whether, people think they can be long or short. There's 3 things you can always do, right? You can be long, short, or on the sidelines. Cash is a position. So whether you have a position, whether you're short, whether you're long, it always pays to understand what the longs are thinking, what the shorts are doing, and what the people in the sidelines are likely looking at. There's no harm that can come from understanding that, right? You don't have to know that. You could just blindly mechanically execute your system, especially if you've programmed it. But if you're fascinated by the markets, if you like the markets, if you're interested in the markets, there's absolutely no harm that can come from that. The only downside could be is that if you get too bogged down into what everybody's doing, you might end up having that kind of deer in the headlights syndrome, because you just see so many opportunities, you don't know what to do. So it's better to try and delve more into that once you have a system that you know you implement and you're very mechanical about that, right? Yeah, exactly, Mario. That's an interesting level, right? So there's no reason why, you shouldn't be focused on that. Okay, guys. Uh, you leave me speechless with the simplicity of the chart with the clear results. You wait for the. I mean, Costas, what we're trying to do is, when you're detached from the outcome of any trade, right? It's important to, especially when you do your Sunday video, is to try and build on your experience. Understand that it's pretty much always the same movie, right? And then to just try and, when the market is closed, it's not in the heat of battle, right? Everything's a little bit more quiet. Try to step back, let's look at what's happening and what's likely to happen based at how price is reacting at certain levels and how it's reacted in the past, right? It doesn't mean we're always going to be right, but we tend to be more right than we're wrong. But that's not because we're particularly smart. I think it's because we have a very systematic approach and we always look at things in the same way. You don't see me, Costas, you've probably been listening to these for a while, right? Uh, Probably a couple of years or whatever. You don't see me coming in one Sunday trying to draw a flying bat pattern or an inverse dragon having sex with a donkey. And then the next week, see me trying to have all kinds of lagging oscillators or whatever, right? You don't see me them trying to draw something else. You don't see me with market profile or whatever, right? Yeah, I'm gonna get in trouble, Debbie. I forgot. I thought I was in the week. So, right? It doesn't matter how you look at the market, but if you keep on moving around, you're likely going to get in trouble, right? It's important to have once you find something that works, to be very systematic, right? As we always say, there are a couple of key things in life, and one of those is going back to the Karate Kid and Mr. Miyagi, right? And as he told Daniel-san, is that um, if you walk on the left right of the road, it's okay. If you walk on the right side of the road, it's okay. But if you walk in the middle, sooner or later, squish, like a bunch of grapes, right? And you always have to look back on the wisdom, right? And it's the thing, you have to go, you have to choose one way, right? You can't start, because nothing's always going to work exactly the way you're going to do it. But you don't, that's the beauty of things. You don't need to be right in your outlook. You don't need to be right in your trades 100% of the time. A lot of people don't realize that. Most traders would be, even professional traders would sign in blood to be right 50% of the time, right? And again, and it's not because you have an outlook or a view or anything that you necessarily have to trade it, right? So, we've been looking at a lot of charts where we were right on our outlook, but, I didn't trade them because essentially also it's the same trade across the board cost us, right? It hits the same trade. So there's no point me coming in here and thinking, Aussie's going to go down, Kiwi's going to go down, Euro's going to go down, Cable's going to go down. Well, no shit, Sherlock's, right? Yen's going to go up. It's USD strength. So I'm not going to come in and take exactly the same trade. There is a time where you might want to take 2 or 3 of those because of location. You might have different time frames, but the last thing I'd want to do is come in and have 24 open trades on all the charts when essentially it's the same position, right? Okay. Okay, we're coming up to 1 hour, guys. So any chart we haven't looked at, more than happy to look at it. Any questions anybody may have? More than happy to tackle any question. Almost choke myself on an ice cube. But yeah, you know, it's the same thing across the board. If you look at the equities, right? If you look at where is it? You know, if you look at the Dow, right? Dow's slightly different in terms of chart here. You see how we're holding above here, right? And it's the same thing. You know, we got that little dip on the ES, and it's the same thing on the Dow here, right? And this is particularly important because once we trade back below this area, right? If you look at this weekly, to be very hard pressed if we start to trade below here with any kind of gusto, or we get a day close below here. You know, it's far too nice for the market not to clip these stops, and then we can start to see a bigger correction. And again, it doesn't mean it's the end of the world, right? It could just be a correction for this move higher to continue. But you know, the way this is trading, especially if we trade here, you know, market likely try and clip some stops. And, you know, across the board, you've got very similar action, right? Because even if you go back and look at the NASDAQ, you see how it's pretty much the same chart across the board? Slightly different, but it's the same chart, right? Back above these highs, we clip these levels, we'll likely try and come down, and then we got bigger correction. But keep in mind, all these corrections are not necessarily the end of the world, right? Because we've broken to new highs. These could just be corrections for then take another stab higher. So you have to be aware of that, and you have to be open to that possibility, right? It's not a GNT, I wish. I almost showed up with a Moscow Mule, but then I thought I better not have any alcohol during the session. That wouldn't be very professional. I'll have it as soon as I finish here. Okay, guys. So it's been about an hour. Let's call it a day. I just don't want these to be too long. If not, they take ages to upload on YouTube. Thank you so much for showing up. As always, thank you so much for all the guys who still bothered to retweet the stuff, sharing the content. More people, the merrier. Have an awesome rest of the day. Really looking forward to this week. Let's see what happens. And again, you know, thank you so much for hanging around with 50. Thank you so much for flying with 50, and talk to you guys soon. If you have any questions, don't be shy. Hit me up on Twitter. I'll do the best I can. Any charts you want me to post, just send me a message on the blog. I'll try and accommodate. Have an awesome one. Take care, guys. Bye-bye.